Hey everybody, hope everyone's doing well and had a good day. This is a recap of the Emini for Wednesday, February 19th, 2025. On the open of this day, we had really tight trading range and lots of small bars with relatively small bodies, prominent tails, lots of overlap, and this is minor. This is all very tight trading range price action. I remember thinking during this time that I believe this is an area where most traders just kind of wait for the breakout, wait for more information, wait for the signal. Because in here, even though nothing's random, look at bar 1, breakout, pullback, pause on bar 2, second leg on 3, and then maybe bar 2, bear reversal, leg 1, deep pullback, leg 2 on 4, another pullback, 3 legs down. It's not that it's random or noise, but it's so minor that to me it's not worth trading. I'd rather wait for bigger breakouts that are easier to trade. So through here I just watch, but I thought bar 10 was the first decent signal as far as a breakout that could actually be traded. Bar 10, we had 3 pushes down to bar 8, and then a breakout on bar 10. So 3 legs down, a bull reversal, and follow through on bar 11. Now this is strong enough that we'll probably get a second leg up, and it's leg 1 after 3 legs down. So when that's the case, when it's leg 1, even in a trading range, it's better, from what I've seen, to be more aggressive. Buy the close, scale in, hold for a second leg. The second leg in this case, bar 13, if you consider bar 11 the pause, breakout on 10, pull back on 11, second leg, 12, 13. It's a big second leg, and it might be a second leg trap. It's a stronger second leg, but the problem with selling here is we have a 5 bar, maybe 6 bar, actually all the way up from bar 8 to bar 16 is a micro channel. And this is strong enough that this entire move might need its own second leg. And when that's the case, you need a second reversal to sell. If you think about what a second reversal is, it's a reversal after 2 legs. Is bar 16 a credible second reversal sell for the bears? I don't know. It's still a spike to bar 16. The signal bar is weak. The selling pressure is weak. Through here, we have open gaps. So I'm not so sure. It's always in long, and then did we ever go always in short here? Again, I'm not sure. 18, pretty big breakout, 3 bar micro channel, so second leg down, likely, but still a higher low. It's a very deep pullback, maybe about 80% of this rally. But again, the bulls are still not finished. This is not a complete price structure. In other words, I'm still expecting the bulls to get a second leg. So even though now it's big up, big down, the bulls will probably need a second leg before the bears get their second leg. And if you compare the strength of the bull breakout and the context, the bull breakout is stronger than the bear breakout. 18, not a good stop order signal bar for the bulls, but it's a stop order trend resumption setup. It's the signal bar. We had a rally, finally a pullback, and this was the first bar that triggered the first stop order buy above a bar after a technical pullback, and that triggered on 19, and then 19 had follow through on 20. So traders selling above 18 got trapped on 19, no chance to exit at break even on 20, and then another give up bar, 21. So another strong bull leg up. So now it might be leg 2, leg 1 up to 13, and leg 2 up to 21, but strong enough rally that this might reset the leg count. And even if it didn't, I think after the rally to 21, at least a third leg up is likely because of the trapped traders below. We came close to retesting this breakout point on 23, but another minor reversal. Is 22 and 23 strong enough to reverse the rally? Probably not. It looks like a minor reversal. But as we continue higher and the leg count gets higher, as we get to leg 3, leg 4, it's going to be more dangerous to buy up here because a correction is expected after 3 or 4 legs. Bar 27, it's a bull breakout, and it's a breakout attempt of yesterday's range, the top of the trading range. But then it had no follow through on 28. It's a bear bar. So now we have 3 legs up, breakout attempt of a trading range, 80% rule. Most of the time, these are going to fail. But the bull still got a second leg, and that second leg subdivided into 2 legs. 1, pause, 2. The problem up here is, like I said, now it's leg 3 or leg 4 up here. So at this point, traders are expecting 10 bars and 2 legs sideways to down. So the reversal 33, probably better to exit longs below 33 because you're expecting that correction, and because of the market cycle, spike, pullback, channel, we could easily test down to the 23 low. Bear, reversal, follow through, more follow through, 3-bar micro channel, second leg down likely, but big up, big down. Leg 1 in a trading range. You can call it a trading range. You could also call it a bull channel, and it depends on how you look at it. The problem with the bull channel, like I already mentioned, is that we have a late leg. So after 3 or 4 pushes up, we're expecting that correction, and this bear breakout is strong enough for a second leg. It trapped traders up here. Here's the bull trend line. We broke the trend line. Expectation is not a V top, so we're probably not going to have this tight channel reverse into a bear trend. But this is strong enough to expect sellers above and at least a second leg down. Major trend reversals happen about 40% of the time, so a trading range is more likely, and that'll happen about 60% of the time. You'll get a trading range or a trend resumption back to the upside. Ultimately, the bears did get their second leg after a deep pullback, and you can see where the market retested. Bar 32 was a weak stop order signal bar, and that's where traders were trapped. We have a gap created by bar 33 and the follow through. So when the market retested this price during bar 41, 42, we failed to break out above this resistance, and the bears got their second leg. But notice the strength of the rally up to bar 41. If this is going to be a major reversal, bull trend, trend line break, retest, the retest is stronger than the bears would have liked. So the reality is there's probably buyers below, whether that's a breakout point or below the bull breakout leg. The reality is that the downside here is probably limited. The bears get their second leg, leg 1, deep pullback, leg 2, but this rally was strong enough for a second leg. So then we got buyers below and a second leg up. And then another decent rally. It's basically a spike in channel on a smaller time frame, 46, pause, and then we channeled up to bar 50, 51. We're testing resistance, so expecting a pause at a minimum. But look at the reversal attempt, 51 to 54. 4-bar micro channel, second leg down, likely, but compare the strength of the rally to the sell-off, and we're staying above the moving average for the most part today. So it's a bull regime. So bear things are going to fail more often. In this case, this bear breakout, you actually could say we got a second leg. 55 broke this small bear trend line, then retested down to the lows before reversing back up. So 57 is a give up bar. Bears who sold, disappointed with the depth of this pullback, exiting on the retest, not willing to sell again until we have higher prices. 57, this may reset the market cycle. maybe sideways enough in here that it's breakout mode, and 57 is leg 1. Big breakout and followed through. We got a minor second leg, and that's common. You often get that scalper's second leg that's more brief before a more complex pullback and a bigger second leg up. In this case, the complex pullback here down to 68, 3-bar micro channel, second leg down likely. We pull back, we test the bar 66 low, breakout point, and got a quick second leg down to 72. 72, possible second leg trap, also testing support, not really an ideal place to be selling after this rally with follow through and then a two-legged correction. But overall, it looks like a trading range. But down here, traders are probably buying, and that's what happened on 73. In this bull breakout, the bulls are still looking for a second leg up after this correction, but so much trading range price action. Traders are going to be scalping in here, buying low, selling high. 78 attempting to be a second leg up for the bulls, breakout, two-legged pullback, second leg, but the second leg subdivided into two legs, 1, pullback, 2. And we know the problem with leg 2 in a trading range. Oftentimes it's a trap. 78, the bulls hoping to get trend resumption, breakout to a new high. But in this case, we found resistance above bar 70. And 78, traders decided to sell the close of the bar. You could also say the sell-off down to bar 72 was tight enough that it's a bear breakout on a higher time frame. We see two legs on the 5-minute chart, but maybe on the 15-minute chart, there's actually no technical pullback, and the sell-off is tight enough that any reversal attempt will be minor until we get a retest of the lows. And that's what we got at the close of the day. So that's going to be it for today's video. I mentioned recently I'm going to try to keep these brief, but I still like doing them. So thanks everybody for watching, and I hope everyone has a good night.